All right, today we are diving into something really, really important. It's a psychological trap that catches so many investors off guard. And if you want to succeed long-term, you've got to understand it. We're talking about something called the liquidity trap. Welcome back to the Neuro Finance Masterclass. So far, we've built this incredible financial engine, right? We've fueled it up with the power of time, we've plugged all those pesky leaks from fees and taxes, but now we have to talk about something a little different. We need to talk about speed. And I'm serious. I want you to pause and really ask yourself that question. How fast is your money? I mean, if you absolutely needed cash right now, how quickly could you access the value that's all tied up in your assets? The answer could literally save you from making some huge, catastrophic mistakes down the road. Okay, so let's get into it. This idea of money speed actually has a formal name in the world of finance, and it's liquidity. Now, you've probably heard this term thrown around a bunch, but I promise you, truly getting what it means, it's a total game changer. So what is it exactly? Well, at its core, liquidity is just a measure of how fast you can turn something you own, an asset, into cash. But, and you have to listen closely here, it's the second part of that definition that is absolutely critical, without losing its value. Let me say that again, without losing its value. See, anyone can sell their house in an hour if they're willing to give it away for 10 cents on the dollar. That's not liquidity. True liquidity is about getting that cash while keeping your capital intact. Yeah, and the thing you've got to understand is that liquidity isn't, a simple on or off switch. It's not just liquid or not liquid. It's really a spectrum. Think of it like a scale, right? On one end, you've got stuff you can spend in the next 5 seconds. On the other end, you have things that could take months, even years to unlock the value from. So, at the far end of the high liquidity side, what do we have? Cash. Cold, hard cash. It's the king. You can use it instantly for anything, anywhere. Now, what's on the complete opposite side of that spectrum? Real estate. Look, a house is an amazing asset, but it is super, super illiquid. If you have a major emergency tomorrow, you can't just sell your living room. It takes months of dealing with agents, lawyers, paperwork, all just to get the value out of that pile of concrete and wood. So the big question is, where does the stock market fall in this spectrum? Well, it's kind of in this perfect middle ground of being highly liquid. Think about it. With literally one tap on your phone, you can sell your shares in an index fund and boom, a couple of days later, the cash is sitting in your bank account. It is unbelievably convenient. And that right there, that convenience, that brings us to the very heart of today's lesson. Because that incredible ease, that high liquidity, it's not always a good thing. In fact, it can be a really dangerous double-edged sword. I mean, you're probably thinking, wait a minute, high convenience and fast access to my money, how is that not a good thing, right? It seems like it should be. But this very assumption is exactly where so many investors get into a world of trouble. This really hits the nail on the head. The thing that makes the stock market so attractive and so easy to get into is the exact same thing that makes it so incredibly dangerous if you're not prepared. Okay, let's really break this down. Why is it so dangerous? Well, because it's so easy to sell, it's also incredibly easy to panic. The market takes a nosedive, your lizard brain starts screaming, "Danger, sell, get out now," and that little red sell button is sitting right there on your phone, just begging to be pushed. Now, just for a second, imagine if selling your stocks was like selling your house. Imagine you needed months of paperwork, lawyers, inspections, you get the picture. Would anyone panic sell? No way. All that hassle, what we call friction, it would force you to take a breath, to cool down, and let your logical brain get back in the driver's seat. So here's the deal. If the system itself doesn't have that built-in friction, then we have to create it for ourselves, mentally. And this is the secret to how professional investors use liquidity to protect themselves from themselves. And believe me, the difference in mindset here is like night and day. An amateur looks at their stock portfolio and just sees a pile of ready cash, which makes them want to react to every scary headline. But a pro, they're strategic. They make sure their emergency fund is super liquid, ready for a real crisis. But, and this is the absolute key, they train themselves to see their investment portfolio as psychologically illiquid. What does that mean? It means they act as if their investments are locked away in a high-security vault with a 20-year time lock on it. They create that friction inside their own head. So even though that sell button is physically right there on their screen, for all intents and purposes, it doesn't even exist in their mind. That is how you guard your wealth for the long haul. All right, time for your task for today. It's a 4-step process. Step 1, pull up that net worth scorecard we worked on before.
Step 2, I want you to go through it line by line and label every single asset as either high liquidity or low liquidity. Step 3, double check and make sure your survival money, your emergency fund, is in a high liquidity account where you can get to it fast. And finally, step 4, the most important one. You're going to emotionally lock away those compounding machines, your long-term investments. Make a conscious decision right now that they are completely off limits.
Because at the end of the day, what are we really doing here? The goal isn't just to build wealth. That's only half the battle. The real goal is to build the mental strength to protect that wealth from the single greatest threat it will ever face. And that threat is you. It's your own emotional, knee-jerk impulses. So build that vault in your mind, lock it tight. That's how you secure your financial future.